Hello traders, welcome back to Simply Forex. I hope you are all well. I hope you're having a wonderful trading week. Today guys, we're going to look at breakouts versus fakeouts. I have a lot of people on my channel ask me, they say, Tom, what constitutes a good breakout? What do I need to look for if it's potentially a fakeout? Okay, so this is what we're going to look at today. All right, so first of all, we're going to look at this example. So this is oil, guys. This is a trade on oil that I was looking at. All right, so first and foremost, guys, we need an area for which we are looking for a breakout. All right, so as you can see, I've got my gray zone mapped out here. And I've got this mapped out because of these last highs here, guys. All right, so I'm looking for a break of this gray zone. All right, and with this candle here, yeah, you can see that we get a break of the gray zone. So this candle here is our entry candle. Okay, so we enter on the close of this candle. Okay, we enter here. All right, I put my stop a little bit below the zone from which we broke out of. Okay, and then I'm looking to, just to let price rip. Okay, so first and foremost, that's how I would enter, and this is where I'd put my stop. And then secondly, guys, this is the most important thing. What I want to see is a break of this candle's high. I want to see a break of this candle's high happen very quickly, okay? Because a breakout trade is a momentum trade. Imagine you broke out of jail. You're not going to break out of jail, then stop. Yeah, so imagine that analogy. Yeah, we're going to break out and we're going to quickly carry on. All right, so this is what we're looking for on the charts, guys. Therefore, that's why I want to see a break of this candle's high happen very quickly. And as you can see, the next candle breaks that high. Okay, great. This is what we want to see. And then once we see that, it gives us the confidence to take price up. Okay. So, yeah, it's a momentum trade, guys. We need the next candles to tell us buyers are still in control. All right. And as you can see with these candles, buyers are in control, sellers not in control, buyers in control, buyers in control, buyers in control. All right. So remember, guys, that I entered on this candle. Yeah, I put my stop below the gray entry zone. So once I get up to here, we're getting a risk to reward of roughly 2 or 3 to 1. Yeah, so it's a nice trade. Also, things to bear in mind is, guys, that we want to know when to exit. Yeah, when would price be a good time to exit? So this is the H4 chart. What I would do is drop down to the H1 chart. Okay, so this was our entry, guys, remember, around here, and then price quickly broke upwards, and that's what we were looking for. But then, as you can see, guys, we've got a bit of a bearish engulfing candle here. Okay, so once I start seeing something like this, then perhaps this could be our cue to exit the trade. Or you just adopt the simple risk to reward strategy. Yeah, maybe you're looking for 1:2 risk to reward, or 1:3, something like that. Let's go back to the H4 chart now. So, guys, it's a bit of a short-term trade, also a breakout trade, because once this breaks, we get some movement upwards. Yeah, I'm going to take some profit. All right, my stops here. Maybe a risk to reward of 1:2, I'm going to take some profit, because 8 times out of 10, you are going to get a retrace back to the zone that it broke. Yeah, look at this. Comes up, comes back down, tests the gray zone which it broke, and now potentially we have room to the upside. All right, so yeah, take advantage of the quick move, get out of the trade, because 8 or 9 times out of 10, you're going to have a retrace, and it will give you another opportunity to enter the trade long. All right, guys, so that's what I'm looking for, and that's a successful breakout trade. All right. Let's take a look at another successful breakout trade now. So this is the pound against the US dollar, guys, and we're going to look at a different time frame. So this is the H1 time frame now, okay? So yeah, these breakouts happen on any time frame. So this was a trade I actually took, guys. Now I was looking for a breakdown in H1 structure, okay? So we was still in an uptrend, okay? Until we broke these lows. And eventually we broke these lows, guys. All right. And then structurally, we were in a downtrend and I was looking for shorts. Okay. So again, we need a zone that we're looking at for us to break. Yeah. Hence the breakout trade. Yeah. And this candle here, yeah, breaks this gray zone. Okay. That's what we're looking for. This is our entry candle. Okay, so if you remember back to my oil example, we enter on the close of this candle, yeah? And then I want to see the low of this candle quickly broken. And it is, yeah? It breaks quickly, all right? And remember, we put our stop above the zone in which it breaks, all right? So my stop is here. So just to make this clear, guys, this is my risk. All right, this is my risk. Excuse my drawing. It's not easy to draw with a mouse pen. All right, but this is my risk, guys. And the low of this candle is broken quite quickly. Yeah, to be honest with you, I don't like the next candle. All right, so also with a breakout, you need to keep an eye on what the candles are telling you. All right, so we get this very bullish candle. And to be honest with you, this would make me worry when I was in this trade. But what I'm going to do, guys, is just wait for the next candle to form. And as you can see, sellers come back in control. We have sellers, and then buyers are leaving the market. Yeah, look at the buyers now. Look how pathetic this green candle is. Yeah, buyers are getting bullied out of the market. And then eventually we get this very bearish candle form as well, but at no point is our stop taken out. Okay, so this candle, yeah, it does set alarm bells ringing, this bullish candle, but then we just have nothing but bearish candles, yeah, and eventually we come down nicely. All right, guys, so again, with a breakout, we want to see a break of this low, but then we also need to keep an eye on what the candlesticks are telling us. All right. And we see with this pair that the bears, yeah, the sellers take control of this market, yeah, at this gray zone. Sellers, is lots of selling pressure. Okay, so this gives us the confidence to keep shorting this pair and stay in this breakout trade. All right, guys, so there's another example of a successful breakout trade. Yeah, really keep an eye on what the candlesticks are telling you. Okay, let's take a look at an example now of a fake out. Okay, so let's look at a fake out now. So this is Aussie dollar, US dollar, and this is the H4 chart. And as you can see, guys, we need to pinpoint a zone from which we are looking to break out from. Okay, you need an area that you're looking at for a breakout. And as you can see, guys, this gray zone, price has reacted many times in this gray zone. All right, so we've pinpointed our gray zone, and this is the zone from which we want to break. Okay, and then we get this beautifully bearish, beautifully bearish candle. All right, you know, if we just saw this candle, we would be thinking, let's short the hell out of this candle. Okay, all right, so this is a breakout trade. Yeah, we enter here on the close of this H4 candle. All right, and we put our stop above the gray zone. Yeah, give it a little bit of room. So what do we not see, guys? Remember, it's a momentum trade. It's very important that we get momentum quickly with a breakout trade. And as you can see here, we just do not get momentum. First and foremost, we don't get a break of this low. Yeah, instead we get a bullish candle. Yeah, admittedly followed by a bearish candle, bullish candle, bearish candle, but there is no momentum to the downside. Yeah, none whatsoever. Okay, so this is a perfect example of a fake out. the momentum is not with the breakout. Momentum has stopped dead. At this level, momentum stopped. Yeah, it did not continue past this low. And instead, we've just got some choppy price action. All right. So if I see this green candle, this red candle, potentially I might hold the trade a little bit longer. But after 1, 2, 3, 4 lots of 4-hour candles, you know, I'm looking to get out of this pair. The trade is not on. This is not a breakout. There's no momentum. So let's say perhaps you get out here. All right. Okay. You're going to make a loss, guys, but you're going to make a smaller loss than what you would have done. Yeah. This will be your loss. But remember, my stop was up here. Okay. So you've minimized your risk. Yeah. And the downside. Okay. So again, if we see this sort of price action, yeah, just choppy at this gray zone, and we don't get a break of this low, get out of the trade for a small loss, or you could potentially get a small profit, but just get out of the trade. This is a fake out. And then sure enough, yeah, if price eventually breaks back up. Okay, guys, so that's a good example of a fake out. There was no momentum to this trade. Let's take a look at another example now of a fake out. So here's another example of a fake out, guys. So this is Aussie dollar against the Canadian dollar, guys. And this is the 4-hour chart. Again, we've got our gray zone because this is the zone from which we need to see price break. All right, we've got our gray zone. Why is it a gray zone? Because price has reacted historically here many times. All right, and then eventually we get this candle, yeah? It breaks our gray zone. Okay. So we're thinking, right, we're going to make millions of dollars. We can start shorting this. Okay. And we can enter this pair. I will enter on the close of this candle. And as I said, I'll put my stop a little bit above the gray zone. All right. But again, guys, it's a momentum trade. Yeah. We need to see price move quite quickly in the direction we want. Yeah, because if it doesn't, it's not a breakout. Yeah, there's no momentum. And sure enough, guys, after we enter on the low of this candle, we have 1, 2, 3. That's 12 hours of price going nowhere. All right, so get out of the trade. Yeah, remember, we need to see a break of these lows, and we need to see it on the next candle or potentially the second candle. Yeah, we need to see that happen quickly. If it doesn't, just get out of the trade. It is not a breakout. Okay, so let's say we got out here. Okay, this is our stop. You know, this is our risk. We've lost minimum between there and there. We've lost literally no money. All right, whereas if our stop was up here, yeah, we would have got taken out with this wick. All right, so get out of the trade. If these lows aren't broken and it doesn't move quickly in our direction, you know, the next candle or maybe the second candle, if it doesn't move quickly, get out of the trade. All right. It does eventually retrace and come down nicely, but that's a different strategy. That's not a breakout strategy, guys. That's a break, retest, enter. Okay. Yeah, so you can trade that strategy, but that's not a breakout strategy. That's a break, retest, come lower. Okay, but an actual breakout strategy is just trading this downwards. All right, and we need to see momentum. Okay, guys, so yeah, we've seen a couple of examples of breakouts and we've seen a couple of examples of fake outs. Remember, it's a momentum trade. Price needs to go in our direction quite quickly. We need to see the low or the high of the entry candle broken by the next candle or potentially the second candle, guys. And it doesn't matter what time frame we're on. Yeah, we need to see that low broken. All right, guys. So I hope that helps you with, working out, is the trade breaking down or not? Is it a breakout? Is it a fake out? So remember the techniques in this video and it will help you trade breakouts and fake outs much better. Guys, if you've enjoyed this video, then please subscribe to the channel, smash the notification button, and also smash the like button. We'd love to have you on our channel, and I'll see you again soon.